Welcome to TMS Insights. It's reporting season, February 24, and it's a busy time for TMS Capital and for all our clients who are watching the reports coming through, Ben, which have been pretty good overall. I mean, it's been a good reporting season to date.
It has. Only about a quarter of companies have reported to date. It's always a big rush in the end of it. However, if you look at the numbers so far, around 43% of companies have beaten analysts' expectations. Around 20% have missed. That beat percentage is the highest we've seen in 7 years. So as we sort of spoke about in the video leading into this reporting season, we had a strong market. We had a lot of people saying the market was looking expensive, but it was looking expensive versus analyst numbers, which to us looked conservative.
Yeah.
And we're seeing now that those numbers are proving to, in many cases, be under, and the market isn't necessarily therefore as expensive as we thought. So it's a margin story, Jeremy, I'd say, calling out one of the themes is what's
margins,
driving it.
Cost management, and revenue's better than expected, which all goes back to a bit of a thematic here that talks to the share market v. the economy. Now, everybody was a world of worry about the economy last year and how rate hikes would slow everything.
Yeah.
It turned out to be excessively worried, and the economy performed pretty well.
Yep.
The share market listed stocks even better.
Yep.
And, one sector I know we've talked about there, retail, is a great consumer-facing area, consumers being 60% of the economy, and everybody worried about the economy for no great reason. Talk to us about some of these retail reports.
The retail results have been the standout.
Yeah.
And I think it's because the market's just been caught off guard.
Yeah.
So we've had JB Hi-Fi, Temple & Webster, Wes Farmers, there's been Setir, and Nick Scali. So a real broad section of the economy. It's not one specific area that's doing well. And I like the themes that we've seen there, I would say I'm seeing in other results, which are companies are using inflation rightly or wrongly to put up their prices a bit, whether they need to or not. And they have been very aggressive on their cost bases in the last 18 months.
Yeah.
And so we're seeing that widening the jaws or whatever you want to call it. We're seeing some margin expansion. So it's not like revenue numbers are coming in and blowing the doors off. It's more that companies have used this crisis or whatever you want to call it, so that
well said.
it's leading to stronger earnings growth than the market anticipated.
And the jaws thing is just the graphical name of explaining how revenues might rise and costs might fall, which is illogical to the growth of most businesses who need to spend to gain extra revenue.
Yep.
But let's talk one of these fantastic companies we've got here. Early report every time, REA Group. Ben, just outstanding numbers where the jaws opened up.
Jaws opened up. I think it's got to be the highest quality business on the exchange because this company has a very unusual cost structure where it can flex its costs very rapidly as listing volumes decline or accelerate. And that's typically through tech spending.
Yeah.
So awesome result. I think just listening to Owen Wilson, the CEO, talking, he has always, and this is the thing about, you want to listen to results because you really get a feel for the people who are running the business. And there are some you take everything with a bit of grain of salt and others you really listen to.
And others are very conservative.
Owen has always called a spade, I'd say, and he sort of said, well, it doesn't look great. But he was very upbeat. And he's upbeat because...
And it's rare.
It is. He's upbeat because he can see a lot of buyer inquiries coming through the platform. So he said there's a lot of people looking to transact, and he's speaking to the McGraths and the LJ Hookers. He said they're all saying there's a lot of volume coming, and so it's almost this perfect environment they're going into. And
it reflects on a period that wasn't perfect.
Yeah,
listing volumes are tough. It's not easy, but they've managed that so well.
Yeah.
So this next period will be better again.
Yeah, and it's another point you come to with this, Jez, is. You could a year ago you could have looked at it and thought, why would you want to own REA?
Right.
And it's a cycle, and this business has there is a cyclical nature to it, but buying and owning this business and not trying to get too cute with what the cycle's going to do.
Better quality businesses, they just work their way through these tough times, and they just accelerate in good times, don't they? So they look good. Let's talk about a major bank, Commonwealth Bank, the only one that reports its half year in this period. So cracking numbers. It had a big price appreciation before the result.
Yeah, and probably I would say the result, given the share price run, really, for it to have held on to those gains, it's a pretty good quality result. And again, it's, sort of when you listen to Common talking, we're not seeing the distressed consumer, or they provision for a lot of bad and doubtful future debts which aren't coming through at this stage. He was definitely a bit more cautious about the outlook, but I think he's got to be, because there's a lot of political stuff.
That's the politics of banking. You've got to always say tough times coming up. But CSL, they've had an interesting time with things, Ben, haven't they? I mean, they were obviously knocked around with those MPIC last year.
Yeah.
Share price recovery, result pretty good.
Result good. It was a bit like the makeup of that result was a bit messy, I thought. So like the bearing business, big tick.
Great. Plasma's doing really well.
The Vifor acquisition, I think the market's a bit uncertain about that, and then they just hose that down a bit.
The upside in the cholesterol drug that didn't meet its end point, did it?
Yeah.
So that was a disappointment.
And that landed the day before. So this is a drug that if you have a heart attack, you would take this drug for the rest of your life, and it reduces the odds you have a second heart attack. CSL spent over $1 billion on this drug, and unfortunately it didn't hit its primary endpoints for the final stage of trials. So that was, and the analysts have been starting to build in
expectation. Early results were quite good. So
I think at 280, this is one you buy again because the core business is doing really well. Yeah,
and that's that's the massissive part of its earnings too.
Completely.
So, it's still looking really good. Deterra. So in the iron ore space, I mean, obviously, iron ore prices have been quite, through all of 23, defying what we're hearing out of China in a lot of ways. And it's reflected in Deterra's numbers.
Yep.
And also BHP, which reported this morning.
Yep. So we've seen for Deterra, the MAC or Mining Area C, this mine that they get a royalty stream from, has ramped up faster than expected, and it looks like the annual production it's going to be kicking out for the next 50 years is going to be higher than expected, on top of a higher iron ore price. It's probably the most simplistic business we're ever going to look at on the exchange. But I would say just one thing we will be keeping a close eye on is they've wanted to start to invest money to pick up royalty in battery metals, lithium. Those guys haven't needed to rely on a royalty company because the market's just flooded them with cash whenever they wanted to raise. That's changed. The lithium bubble has gone to lithium bust this year.
It was a bad Christmas for lithium.
It was. So it sounds like they've got some targets they've got their eye on now. We'll see what we think about that. BHP, I thought was okay.
Yeah, look, I think it's just not the glory days of a couple of years ago, but it's still pretty solid. I mean, you have to be pretty happy with a number of the metrics. I thought, obviously, debt levels have risen quite a lot from very low levels. I mean, the balance sheet's incredible, but still a lot of opportunities. I think it's how they execute on it. Interesting how they've stayed out of those lithium metals and all of that, so they stick to their core. I think the potash story is the big one to keep your eye on there and see how that grows in the next few years. It's but look, overall, solid, not spectacular.
Yeah, there was a number of one-offs in this result. There's this Samarco thing. Everyone's got this big issue with this flood of nickel that's come out of Indo. There's some big write-downs that's happened. So, but one-off in nature and should be non-repeatable going forward.
Goodman Group. We highlighted this with clients last year about the data centre thing. And data centres, people would know through their international side of things, what we've talked about with Amazon and Google and Microsoft, etc. But Goodman, a major player, they're doing a lot of their new investment in this space.
Yeah. I think this was a good pickup a year ago. The stock's risen over 40% in the last 12 months now, and probably not rushing to buy this one at this price, you'd say. But nearly 40% of Goodman's work in progress is now around data centres. They are rapidly going to become one of the biggest players in the country and rolling into Asia as well. And, with Amazon as their key sort of partner, AWS is the largest cloud storage provider in the world, and AI is seeing this boom in storage demand. So looks like they're in a good spot.
Good spot.
Greg's done a great job.
Yep. SEK.
SEK.
Again, this is a classic case talking about earlier, REA Group, a company that
Completely.
almost always talks itself into being sold off on its result and bouncing back a day or two later.
Yeah.
Because they don't promise the world at their reporting period. And so Ian Narev was typically understated, as the Bassett brothers have been over a long period of time. So, but really, is this a case of catch up for the early stage venture businesses while the core business is in sort of a steady, mature phase?
Yeah, I think personally, I listened to this one pretty closely, and I reckon this is REA's 12 to 18 months ago, because the big highlights from this were yield, so they're getting paid a lot more per ad. The cost base is running at the same level as it was 3 years ago. So they've done this reunification project where now all of the global job platforms are on the one IT platform. That was a huge project.
That'll save a lot, yeah.
That's going to be good going forward. But the thing that was a negative was that we saw this very rapid tick up in the unemployment rate and job ads coming down. That's the only thing in this business that is out of their control, just as with REA, listing volumes are out of their control. So typically get bullish on these businesses during this period. Maybe there's a bit more to come, but it looks pretty good to me.
WES Farmers?
Yeah, that was a cracker.
Really good. Again, and that surprised the market, didn't it? It definitely did, and it shouldn't have. It's a big company, well followed.
Yeah.
Still surprised.
The biggest surprise, like the irony in this one, I mean, we sent out a piece a year ago on WES Farmers, and we added to it last year because of the lithium thing.
Yeah.
The lithium thing's not going to make any money this year.
I know.
It was Kmart. Who would have thought that they blew the doors off? That's a third of group earnings now.
And that's incredible management turnaround.
Yeah.
That was a true dud.
Yeah.
5 years ago.
Yeah.
So credit to them. A great result from Altium.
Yes.
Takeover bid last week. Wonderful.
Yeah. I mean, an incredible ride with this business, and I think it was the multiple the Japanese are paying for the company took everyone by surprise, and the speed at which they've acted. This is.
It's a knockout blow, isn't it?
It's an incredible price.
The bid last year from 3 years ago, Autodesk was $38.50.
Yeah.
This is a serious bid.
And this is 19 times revenue.
Does this remind you of the Japanese post-bid for Toll?
Well, I think Altium's a much better business than Toll.
A good fit too, yeah.
But it's a big price. I mean, they just have this history of coming and saying, well, we'll pay this. There's no back and forth. And we saw that with the vitamin Blackmores as well a year ago. Yeah. So, look, it's a credit to the Altium business. I think it's been an incredibly good investment for us. And, I know everyone might have a bit more cash in their cash account at the moment. We do have a couple of businesses that we probably won't talk about today because we've gone way over. But we are looking at post results and hoping to catch up with some brokers and management teams, and definitely it might be an April story that we start talking about. Looking at
definitely. We're doing some deep dives into a couple of these and look forward to bringing some news. But we've got some more reports in a couple of weeks' time for you as we get back to the February reporting season.